All right, everybody, welcome back to another episode here on the Dividend Doggo Show on YouTube, and I am bringing you into a weekly portfolio review. This is for the last week of January 2022, and I am just going to go over kind of what everything looks like for the week. As you can see from the totals, we're still in the green pretty significantly overall for the portfolio. Our earned dividends is climbing toward $41,000, which should be there within just a few days. And, overall, we're sitting at $711,701.65 in the portfolio current value. And we're just going to kind of go through. You can see that I had moved over some cash. I wanted to make sure that I was ready to do a buy this week if the market kind of crashed. But as you can see kind of from the blip here that was, about 2 weeks ago now, the market pulled back pretty significantly from the all-time high of the portfolio being somewhere right around 736,000. So, we are down a little bit from the last 2 weeks still, but let's go ahead and take a look at how we performed this week. Now, as a lot of you probably know, Apple had earnings this week. There were tons of different earnings calls and announcements and things like that. Microsoft announced they were buying, Activision Blizzard, which I think is fantastic for their additional cash flow, because they're just going to print money off of the IPs from that company. And hopefully they'll revitalize some of the old underused assets that the company has. But let's go through and take a look. As you can see, we were up about 2% on the money weighted average return. We didn't have any dividends come in, so this is the actual core gain for the portfolio. So if you had ducked out at the end of the week that was going down, you would have missed out on some pretty significant gains this week. So just staying where you are with your positions most of the time, unless you had a reason you were going to sell, it's probably a good idea to just hold on. So overall, for the sectors, I'm not going to dive into every single one of the categories here, but I will dive into a couple of the big ones. So obviously, healthcare was up pretty massively. AbbVie is just keep going. It just keeps going and going and going. It was up 4.5%, but J&J was also up 4% this week for the portfolio. So both of them just were stellar performers. I think what we may have seen was some of the people who had pulled out may have rotated over into the healthcare stocks a little bit. Getting those dividends are pretty fantastic. AbbVie is still a pretty hefty dividend, like over 4% at today's value, which is absolutely wild to me. Overall, consumer was up a little bit here. You can see that Home Depot bounced back about 5%. Costco was up 2%. Lowe's was up 4.4%. Pepsi was down still a little bit this week, which is kind of interesting. Overall, though, that set of sectors in that pie doing really, really well. So utilities, Vistra and Duke. Vistra was down just slightly at the end of the week this week. This is a very, very minor being down. It's just such a small amount. Overall, finance ended the week almost flat. Coma Money was up, mainly, I believe, off of the back of Berkshire Hathaway being up 2.5%. So that was pretty nice to see that coming up. And then we have one of the big heavy hitters was obviously Apple and Microsoft. They, came in swinging at 4.88% up for Apple. And if I look at one day, Apple was up 6.98% for one day, which is absolutely fantastic. So while there were still some losses from these stocks overall for the month, if we go out and look at 1 month, you can see that they're still down about 6.7% total when they're combined money weighted average. You can still see Microsoft's down pretty significantly, and Apple for 1 month But, if you had sold out at the end of the week when they were down, you would have missed out on a near 5% rebound for Apple and 4% for Microsoft, which is a really big deal, and why you don't want to just sell out of stocks when you think the market is tanking, because it can literally flip on you the next week and go right back up. Next week could be another green week. I don't presume to know the future, but I'm certainly going to hold on to these for a while longer. Industrials was up 2.45%, and the monthly stock pile, which is basically pile. The sector here for the slice that I have set up is mainly BST, followed up with the owner's rewards pie for the credit card, which was down just slightly for the week. But overall, BST was coming back up off of the news mainly of Apple and Microsoft and the other tech stocks. So that really brings us into the hard lesson of, you can position yourself as best you want, but you got to check your emotions at the door, because when stocks do start going down, you really have to pay attention to what you're buying and what you're selling. And if there's no need to sell, then you probably shouldn't sell unless there's an absolute definitive reason why you would want to. So overall, that's kind of how we looked for the week. I did do one buy this week because I thought the market was going to go down a little bit. I moved money over thinking that, I might be able to get a bargain or a discount on something. But I ended up just going with investing in SCHD, an extra $500. And that's kind of how that goes. Now, I've gotten several questions in the past, because I have a link in my description of basically how I would start over if I was to be starting from $0. And that would be basically investing in SCHD and a growth index similar to either QQQ or SPY-G. I think both of those are absolutely fantastic. But what would I do for someone younger? And that's what I'm going to show you here right now. Is you can see I have multiple different accounts here, but I set up these accounts, which are custodial accounts, for my cousins who are, I think, 13 and 14. So I invest for them, and I give them little homework assignments and stuff, and every month I do an investment for them, and their portfolio did a purchase just recently. Now, I just started these because you can see I started with about $100 and then doing little smaller buys depending on how things were going and what extra money I had to throw in there. But as you can see, it's purely SCHD right now. Now, the main reason that I'm using SCHD for them is because they're so young. This has the true power to compound into something absolutely amazing with its dividend growth yield and the structure of the way that SCHD works. So I think over time it will be absolutely phenomenal for them to see how buying this particular index fund or ETF basically allows them to create pure passive income that comes in every 3 months, no matter what's going on. They will consistently see that it's adding money to itself, compounding, and then by the time that they're 18 years old and can take these over, my goal is that they have a core position of, somewhere between $20,000 and $30,000, hopefully. I don't expect to be able to add every month to this. However, I do try to add about $100 to each one of those every month. And eventually I will probably add another index, either like VTI or something else to it. But for right now, I wanted to build up at least to like $1,000 in SCHD for each of them, so that they can see how the money grows and how the earned dividend income makes it easier and easier to buy more stock, because the stock is lifting the weight for you at least 4 times throughout the year. It's adding a certain amount of value to the amount of shares that you're getting and purchasing. So overall, it's been a pretty fantastic week. I went out, got my COVID booster, and I've been a little sacked out from that the end of the week this week, but I started working on another side hustle project, which is getting rid of stuff that I've been holding on to for like 20 years and selling things on eBay and listing auctions. And I have to do a trip to the post office this morning to sell some things because of that. But overall, I just want to clean out some of the clutter and some of the consumer things that I bought over the years that I just don't care for anymore. There's some weird like DVD box sets and stuff like that we've collected that just, it's time to try to get rid of some of that stuff. And if it doesn't go, eventually it's just going to get donated to like the public library, and got a lot of books and stuff like that to get rid of. So overall, I hope that all of you had a great week with the markets. And if you were buying this week, let me know what you purchased and how you feel about the roller coaster that has begun 2022 for the stock market. Overall, I appreciate every single one of you. Thank you for all the subscriptions, the comments, all the likes on the videos. I greatly appreciate all of you, and I look forward to seeing you in another video very soon.